Welcome to the market update. Today is February 22nd, 2020, Saturday, midday. I hope you guys are enjoying your weekend. Thanks for your patience. I had some things to take care of yesterday. I was not feeling it to do it yesterday. I don't like to rush things anyway, so I think today is Saturday, market is closed, things are quiet, and I like to do sometimes I like to do them on Saturday, so I think it's a good time to do it today. As usual, let's continue with our weekly analysis. Let's start with Spider, and then Diamond, Qs, Russell, Transport, the banks, and the Semi here. Let's start with the Spider here today. So last week, so last Friday, right? We talked that was at last Friday, 14th. Last Friday, yeah, we're about here, just kind of zigzagging, moving sideways. We talked about some levels here that potentially, if the price slides going into this week. So I gave you these two levels, 331, 328. So we saw a pullback and we saw a gap down on Friday. So we got this down gap here. And I think that down gap could make things a little bit hectic for the bulls in the micro term, the short term. When I say micro term, I mean couple days. So this gap, unless bulls can have to gap it up, but that gap is going to make things hectic. I won't be surprised to see possibly coming back here, retesting this gap area. We got this gap here, so I think this level 331, 328 is still going to the level to watch going into this week. I am still bullish. I don't believe the market is gonna see 10% or 15 or 20% corrections, despite what you hear from the bears. They're saying that market has gone straight up, so there's gotta be a straight down move. That's not the case. We're not gonna see a straight down move. I think the worst case scenario here, let's say so far we have about 1.7% decline. I think 3% is likely. 4% is ideal. The worst case, the worst. I mean, this will. I don't believe that. I don't believe this is gonna happen. But the worst case scenario, this is gonna be I don't believe it's gonna be any worse than this. It's gonna be 6%. And if we see 6% decline, you buy this dip pretty hard. But that's the level, and that's the worst, and I don't think it's gonna happen. I really don't think it's gonna happen. But hey, I could be wrong, right? So there's a gap here, and you don't see it on the daily chart, but you will see it on if you go to intraday chart. And this moving average, I believe, is 100 SMA. Let me double check. That moving is 100 SMA. So this moving average, you know what? I think I set that at low. So let's actually make that 100 SMA set at close. Okay, so now, this is 100 SMA and this is a 50 MA, right? The dotted blue and then the 100. So this 100 SMA is also residing here, coinciding with the gap area, right? And there's 100 SMA. So 6% will be the worst case scenario, and that will be the time if the market really want to shake things out, and you're probably gonna see so many people panicking in fear, right? So and we have that rising pivot, and so we'll break below the pivot. A lot of people talk about it. A lot of people gonna say this is gonna be the mother of all trap, and a lot of people gonna start to short on this up move. But I think if we do see a 6%, you ignore all of that. That will be the level to accumulate kind of heavily. And it should be a long term, because I think throughout the summer, we're probably going to see a slowdown. Though market is capable of doing the unthinkable, and we talked about that, last several weeks or so. But, what if you start accumulating down here, your goal is end of the year, not what's going to happen in a week or month or 2 months. Right? But it's good to accumulate on pullbacks, position yourself well, and then wait for that, towards the end of the year rally. That's what position trading really means, is positioning yourself before the rally, right? And you never chase a move. You never chase, you know, a breakout. You position yourself before the breakout, right? That's what position trading really is. And you probably, you know, you're probably not going to find anybody out there who's a position trader. Everybody out there you probably follow is day trader, swing trader, right? And when they swing trade, I mean, they'll hold things 2-3 days. And I still want to categorize it as a day trading. When I used to swing trade, I swung. Like it's like I would hold things a week to a month. As a position trader, obviously, I hold things much longer now, 3 to 6 months, 6 months, 9 months, especially on those leaps that I hold. But I'm also active investor, so I have shares that I've been holding since 2016 lows there, you know, on the equities. So I'm much longer term than most people you might come across on social media or YouTube. Just let you guys know. So when I say that this is a good level to accumulate, if I don't think we're gonna see it, but if we do, to hold remainder of this year. But ideally, I think 4% to 3%. That's ideal level, 4% 3 before we bounce back up. And I talked about this last couple weeks that this is gonna be important pivot. I think we're gonna retest this couple times. I don't know what kind of shenanigan is going to occur in this vicinity. We might see something like that, and you're going to see people calling for a head and shoulder formation. They already failed once because we saw head and shoulder formation. It's a formation, never broke below it, never confirmed it. People are talking about it, and that's the level where we saw bigger triple top, right? People are talking about, oh my God, we got triple top here. Oh my God, we got head and shoulder formation here on top of the triple top. Wow, that is a monster topping pattern. That's what everyone is saying. What does the market do? Well, it's going to do the opposite of what majority thinks about, right? Because the market tends to fool the majority. Therefore, the majority tends to follow the fool. But anyway, so we may see something like that, but this time market is going to do a little trick, maybe get slightly below it before going higher. I don't know, right? I don't know at this point how the market is going to do. We'll react and we will adjust as the market give us more, you know, evidence what the market is going to do. All we know for now is that we're just pulling it for 1.7%. It's nothing. But every little tiny pullback, we got somebody somewhere just going crazy, right? It's like house is on fire. Right? And they don't know how to trade the market. They don't know how to look at the market, and they live in fear. So we don't want to be that person. We don't want to be that trader. We want to look at things long term. Okay, and I've been teaching you guys how to do it. I've been helping you to navigate this market since early 2016. If you go to my YouTube channel, there's many long term analysis that I've done. But anyhow, so right now it's here. It's no biggie. We got a little pullback. We're a little gap down. It's nothing. Could escalate into something, yes, but nothing like 10% or 15%. Like I said, 6% at worst. And I still don't think it's going to happen. But 4 to 3 is what I'm thinking. 4 to 3, which will get to 331, 320. That's kind of what I'm thinking. And we bounce back up and then possibly pull back, retest this couple times before making a run there. So that's kind of what I'm thinking about here. So I think going into next week, we could see some lagging, lethargic, bearish type of move going into next week there. So we got gap down here also on Dow. I gave you 290 last week. We're holding that level. I think we just filled that gap here. So let's make that here. So this gap has been filled. You know what? I want to check it. Let's go to hourly chart. So obviously we have this. We're on a 65-minute chart here now on Dow. Obviously there is gap open right here. But what I'm trying to find out is this gap. The gap is slightly open. So this is where it closed. Okay. I think everybody's going to ask me about, like, well, there's no gap here. Here, let me go to 1 minute and you'll see it. Oh, I think my 1 minute doesn't show that far, does it? I don't think it's going to. Oh, it's too much. Just 1 minute is too much, man. I don't even know how people can trade looking at a 1 minute. It's crazy. 10 minute, does a 10 minute show? 10 minute doesn't show. Let's go to 5 minutes. Gap is there, trust me. Okay, there you go. Now I see it on 5 minute. There you go. You see this. See it on 5 minute. There. There's a gap. That's where it closed. And next it opened here. So there's a gap. But it came down, filled initially. It filled it, but it didn't fill the entirety of it. Right? So what does that mean? Well, for now, a lot of times when the gap doesn't get filled entirety of it, it's actually bullish signal. I'll give you an example. So this is a bullish gap, right? Again, we don't know it yet. There's another down gap here. So there's a good chance that this thing could gap back up on Monday to challenge this gap. And I don't know if it's going to be filled or it's going to challenge it and come right back down to fill this gap. But for now, you see how bears brought it down, but failed to fill this gap entirety of it. We left a little bit. So this is actually a bullish setup in the minor term, in the micro term. Here, I'll give you example here. You see there's a gap here. There's a big gap down. Remember this? That's where it closed. That's where it opened. So there's huge gap. That's a down gap. Bulls got up, but what did the bulls do? Failed to fill the entirety of it. Again, some people, don't ask me this, man. There is gap. You go to 5 minute chart, you will see it. There's a gap. That's where it opened. That's where it closed, and that's where it opened. So there's a gap. Failed to fill this entirety of it. Left like 25% of it, and that became a problem for bulls. Even though there was a lot of strong candles, but was not able to fill it, and subsequently you can see this thing brought it lower and made even lower low. So looking at things in a micro term, and let's reverse that now, right? Because this was a down gap, right? Now this was an up gap, and this time bears brought it down because this was down gap and bulls trying to back up, but bulls was not able to fill this gap, entirety of this gap, right? So now we got this big down gap or up gap. Bears brought it down, but not feeling the entirety of it. We left about 35% of this gap, and that's usually a bullish setup. Same thing here. This is a bearish gap or bullish gap or bearish gap, right? And bulls was not feel the entirety of it and then brought it down. This is a bullish gap. Bears was not feel it. Possibly. So when they leave the gap behind, not feeling the entirety of it, is usually a bullish signal in the short term. So let's do that for now, and let's see how the market deals with 290, 285. If we lose this, there's a good chance it's gonna come down. At least there's a chance where there's another chance where it could come and fill the gap, and then that becomes support too. So there's kind of like a double support happening in the micro term, right? There's here and there's another support here. That's why it's important that you track gaps here, and that's kind of the vicinity that we're hanging out there. So let's see how it deals with that going into next week. Q's is way far out there. We're nowhere near the gaps. There's that gap right here. We're nowhere near it. So I gave you 225, 220, 230 last Friday, right? And we haven't even begun to, we're not even near that rising pivot yet. So if we continue lower, 225, 220, 230 will be the level to watch in the short term. Russell 2000, I think feel this gap. There's still gap remaining. There's still gap remaining here. Right? There. Not filled. This gap is not filled entirety of it. So it's going to provide support going into next week. But I still give you 166, 164 on the Russell 2000. Let's go to transport. there's some gap there. Let me give you this 192 and 189. I think we're gonna hold it. I don't think it's gonna go lower 189. I think we're gonna hold it. XLF. Same thing happened in XLF. I don't think it filled the entirety gap. We left some. I gave you 30 last week. I'm gonna move it down here now. I'm gonna move it down to here. 30, 45, 29, 94. I don't think it filled the entirety of the gap. You see right here? Right? This was a gap. Right? That's where it closed. That's where it opened. We filled it, but we left some. Again, we left some here. So we saw that at we saw it in Diamond, we saw it in Russell 2000. We're also seeing it on XLF. I think with that we may see a bounce on Monday or Tuesday, but I think after the bounce would be then like how is it gonna deal with that gap that occurred on Friday, right? So that will be the question. So that will be interesting to see how this market. So you see that gap here, and this is gonna try to get up, and how this market is gonna deal with this. And that will be the question going into next week there, right? And again, you can follow me at 2K Kim on Twitter, and if I see anything, maybe this goes up and gap it up and making the island bottom or something like that. I see anything, I'll share charts and my thoughts on it. So you can follow me on 2K Kim on Twitter. Let's go to Semi. I'll end the video with this. So yeah, there's that rising pivot, right? So there's a little gap here that happened Friday, and I will give you 142, 137. I think the worst case scenario 133. Let's not even put it there. I don't know we're gonna get there. I think 140 to 137. We're gonna find pretty strong support here. Sometimes what the market likes to do is that if this is too prominent, if it's too obvious, and we wouldn't know yet. If everybody's looking at this rising pivot, I don't think everybody is though. I think more people are probably looking at. I'm guessing more people are looking at, because more people love to more people loves to draw trend lines like this. So anyway, we got this uptrend too. So we got a lot of support on the on semiconductor here. We got the rising pivot, we got the rising uptrend support. Sometimes what the market loves to do, and as of today, I'm not leaning towards that's gonna happen. Sometimes what it loves to do, I'm gonna end video with this. There's rising pivot, right? And then there's rising uptrend support, right? And everyone's gonna be looking at that, and everyone's gonna place their stop there. Maybe if they chase it up here, market loves come down, take all your stops before going higher. We'll talk again next week, but if this thing gets lower, I would go heavily long on semiconductor. That's where you don't want to start messing around up here, because you should already be positioned here. This is what I said last couple weeks, right? This is what position trader means. If you want to become a position trader, you position yourself properly so that when market breaks out finally, you don't chase. Now you have a luxury of options. Do you close out a little bit? Do you wait to buy some dips? Obviously, if it comes down, you're gonna buy even heavier. Versus you chase it, now every day you're anxious about, okay, what is it gonna do? Is it gonna go higher? Is it gonna go lower? Oh my god, I don't know. What is it gonna do? It's extended. People say crash is coming. Oh my god, I'm gonna place my stop right here. I'm gonna here because we got uptrend support here. We got rising pivot here. Yep, I'm gonna place my stop right here. Market knows it. It's gonna take your stop, goes without you, and the next time it's gonna go high. So don't chase. You get burned. Position yourself early, before the breakout, before the public participation. You never wanna go with the crowd. I mean, have you ever gone to like crowded places? It's a mess, right? You go to Costco on like Sunday afternoon, it's a huge mess. You go to like concert, you go to Black Friday sale, it's a huge. I want to avoid at all costs. Like I love to go like when there are not a lot of people, you know. Then you can sit back and relax after this kind of move. It's always, you know, big crowd always make things hectic, like in the market and in real life. So I like to avoid a big crowd, and I like to be in a, you know, quiet places so I can enjoy my calmness and my peacefulness, right? All right, so that's for me today. Let's see how he plays out next week, and we'll follow up, and we'll go from there. You guys have a wonderful weekend, and good luck trading next week.